Okay, so we have gone through liabilities, we have discussed assets, and now the next important thing, which is investments. Okay, what are investments? Investments basically means the surplus money of a customer
Sir.
is being invested for better returns. Okay, you must understand why do we call this an investment? Okay,
Yes, sir. Yes, sir.
investment, the first condition of investment is that a customer should have a surplus funds.
Yes, sir.
Okay, the customer, when they have surplus funds,
Yes,
they
sir.
will have different avenues to invest.
Yes, sir.
Okay, we have seen that savings account pays a particular interest rate,
Yes, sir.
right? It is somewhere 2.75, somewhere 3.25, or somewhere 5%. So depending on the bank, the savings interest rates are like this or in this range. Okay.
Yes, sir.
We have the customer can invest in savings account and get an interest, correct?
Yes, sir.
The customer can also invest in fixed deposits.
Yes, sir.
Okay, in fixed deposit, the interest rate is slightly higher than savings accounts. Okay, we
Yes,
have
sir.
seen that the peak FD rates in different banks range from 6.4, 6.6, 7.1. Okay, so it depends. It goes on a range. Okay, some banks are even giving 7.5, 8 and all. Okay, so if you have surplus money, a customer has got surplus money, he can
Yes,
have
sir.
the surplus money in savings account which will give a return.
Yes,
He
sir.
can deposit it in a fixed deposit and he will have a certain return. Okay.
Yes, sir.
Now there are other avenues also for of investing that surplus funds. Okay. Which are not banking products. Those are not banking products. For example, mutual fund. Okay. Mutual fund is not like a bank deposit. Okay, please understand. There is a difference between a bank deposit and a mutual fund. In a bank deposit, you
Yes,
will
sir.
deposit your surplus funds in your name and the bank will give an interest to you, right?
Yes, sir.
In a mutual fund, there is a pool of money invested by several customers, and that pool of money is managed by a professional fund manager.
Yes, sir.
And the investments and the investments that you are making into a mutual fund can either be invested in by the fund manager
Yes,
into
sir.
equity market, or it can be invested in the debt market, or it can be a mix of both equity and debt.
Yes, sir.
Okay, so
Yes,
please
sir.
understand there is a difference between a bank deposit and a mutual fund.
Yes, sir.
Okay, bank
Yes, sir.
deposit is you depositing your money in a bank and the bank pays interest to you.
Yes, sir.
In a mutual fund, several customers like you
Yes, sir.
deposit different amounts and all
Yes,
this
sir.
amount is pooled together
Yes, sir.
and the investment decision is taken by a fund manager.
Yes, sir.
He can invest in equities, which is in the stock market. He can
Yes,
invest in
sir.
debt funds, which are, bonds,
Bond
treasury bills,
stocks.
whatever,
Yes,
whatever it
sir.
is. He can invest in bonds.
Yes, sir.
Okay, now there are different types of mutual funds. There are exchange traded funds. So there are several hundreds of mutual funds which are available, which have got different investment themes,
Yes, sir.
right? But the decision there is taken by the fund manager.
Yes, sir.
It is a trust which collects money from a number of investors with a common investment objective and invests the same in equities, bonds, money markets, and other securities,
Yes, sir.
right?
Yes, sir.
Since it is professionally managed by a fund manager,
Yes.
there is a cost which is involved, right?
Yes, sir.
So the money will go into a trust, okay, and the
Yes.
investments are done by professionals. There are applicable expenses,
Yes, sir.
right?
Yes, sir.
Here's a simple way to understand a mutual fund. Okay, for example, there is a box of, this is a simple example. Okay, we have made this example just for you all to understand.
Yes,
Let's
sir.
assume there are 12 chocolates which cost 40 rupees. Okay,
Yes, sir. Yes, sir.
four friends decide to buy the same, but they have only 10 rupees each. And 12 chocolates are sold as a single unit in a single box by the shopkeeper. The friends then decide to pool in 10 rupees each and buy 12 chocolate and buy this box. And after that, they divide 12 among themselves, which is 3 chocolates for each of you.
Yes, sir.
Right?
Yes, sir.
So, how is the cost of one unit? So, 12 chocolates
Yes,
has
sir.
cost 40 rupees. How much is the cost of one chocolate? 40 by 12, that is 3.33. So, a mutual fund, the value of a mutual fund is calculated in a similar way, and the value of a particular unit, mutual funds are also given as units to you.
Unit.
Okay.
Yes,
The
sir.
value of a unit is called a net asset value.
Yes, sir.
Okay. The net asset value is calculated in the way, the example that we have given. So 12 units cost 100 rupees. Each unit is 3.33.
Yes, sir.
Right? So
Yes, sir.
basis how much you are investing, the number of units will be allocated to you.
Yes, sir.
Who should, for whom mutual funds is useful? For investors who do not have very large sums for investment, but they want to take part in the stock market. People who cannot do market research, but they want better returns than the fixed deposits. Right? Money
Yes, sir.
collected in mutual funds is invested by professional fund managers, and a small fee is deducted for the from the investment.
Yes, sir.
Right? So mutual funds are invested by two kinds of people. Okay.
Yes,
See,
sir.
for example, you you cannot analyze every company in the market and arrive at which equity to invest in. Correct. There are some thousands of companies in the stock market. How will you know which company to invest? You as a retail investor, you
Yes,
will
sir.
not have the research reports. You will not have the calculations. You may not be able to make such calculations to arrive at proper investment decisions. Okay. In a
Yes, sir.
mutual fund, a professional fund manager arrives at such decisions for you.
Yes, sir.
Right?
Yes,
Mutual
sir.
funds are regulated. We have already seen this. Mutual funds are regulated by the SEBI. Okay.
Yes, sir.
India has one of the highest savings rates globally. Pension
Yes,
for
sir.
wealth creation makes it necessary for Indian investors to look beyond FDs and gold and towards mutual funds.
Yes, sir.
Very good investment, okay, which will give a good return. But why you as a banker, you will have to guide your customers towards mutual funds is because
Yes,
mutual
sir.
funds offer better returns for customers.
Yes,
Okay.
sir.
And you as a banker, you are also playing an advisory role to the customer.
Yes, sir.
You must guide the customers towards the best investment decisions that they can make. That is
Yes,
another
sir.
role of a banker.
Yes, sir.
The goal of investments varies across customers. Post retirement expenses, money for children's education, house purchase, etc.
Yes, sir.
So there are hundreds of mutual fund schemes which are available, which will adhere to the investment tenure of the customer. Okay, basis how long the customer can hold the funds, the investment decision has to be made.
Yes, sir.
Mutual funds offer excellent avenue for retail investors to participate in the capital markets. Mutual fund investment can be beneficial, but it can also be challenging. There are some instances where sometimes when the market goes down, the investment will go down also. But mutual fund investors should have a long term game plan. They should hold on to the funds. Okay.
Yes, sir.
Always understand that mutual funds are a long term investment.
Yes, sir.
Okay. The
Yes,
investment time horizon is long, and the mutual fund advisor, which is you in this case, you should
Yes,
be
sir.
able to guide a customer according to the tenure that he can invest in.
Yes, sir.
Okay, there are different. So there are different mutual funds basis risk return trade off. Okay, we have already discussed multiple times about risk return. Okay, higher
Yes,
the
sir.
risk, higher the return. Correct.
Yes, sir.
You would have already seen this. We have discussed this multiple times. Okay,
Yes,
liquid funds very short term. Risk is also low because in a short term the market movements may not be very high. Okay.
yes,
Then
sir.
comes ultra short term, arbitrage fund, capital protection orient funds, where risk is lower, return is also lower. Income funds, fixed maturity plans, income long term funds, gilt funds, monthly income plan, balanced, gold ETF. So here, as we go along, the risk also goes up, the return also goes up. Then
Yes,
index
sir.
funds, what are index funds? What is an index fund? Any idea?
Index fund. No,
What are
sir.
the indexes? What are the indices which are available in the country? Sensex and Nifty. Okay.
Yes, sir.
There are two stock markets. There are two indices which are available in the country. Okay. Bombay Stock Exchange Index is called Sensex. National Stock Exchange Index is called Nifty. Okay.
Yes, sir. Yes,
Sensex
sir.
is how many stocks?
Sensex
How many
nearby
stocks?
11,000 something, sir.
No, 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 no. How many stocks are there in Sensex? இண்டெக்ஸ்ல எத்தனை ஸ்டாக் இருக்கு? 30 ஸ்டாக் இருக்கு. ஓகேயா?
Yes, sir. Yes, sir.
நிஃப்டில எத்தனை ஸ்டாக் இருக்கு?
50.
50 ஸ்டாக். ஓகே.
Yes, sir.
இந்த
Yes, sir.
50. ஸோ இண்டெக்ஸ்ங்கிறது என்னதுன்னா இண்டெக்ஸ் ஃபண்ட் அப்படின்னா என்ன அர்த்தம்னா இந்த 50 ஃபண்டில் தான் இன்வெஸ்ட் பண்ணுவாங்க. இந்த
Yes,
50
sir.
ஸ்டாக்ஸ்ல தான் இன்வெஸ்ட் பண்ணுவாங்க.
Yes, sir.
சிமிலர்லி சென்செக்ஸ் ஃபண்ட் அப்படின்னு சொன்னா அந்த 30 ஸ்டாக்ல தான் இன்வெஸ்ட் பண்ணுவாங்க. ஓகே.
Yes, sir.
Equity is like stock market investing can be invested
Yes, sir.
across the stocks which are available. Thematic and sector oriented fund. There are several sector oriented fund like pharma fund, FMCG fund, airlines fund. There are several other funds. Okay.
Yes, sir. Yes, sir.
Types of mutual funds: open-ended, closed-end fund. What is an open-end? Where subscribers can join and exit at any time.
Anytime.
Okay, it does not have any maturity fund,
Yes, sir.
right?
Yes, sir.
Close-ended fund, it will have a period of subscription after which you cannot join.
Yes, sir.
Okay, and premature redemption is not allowed.
Yes, sir.
Okay.
Yes,
Then
sir.
there are other types of funds also, actively managed and passively managed. Actively managed means what? The fund manager will actively manage the portfolio, resulting in multiple buying and multiple selling during the course of the investment.
Sir.
Right? In an active fund, the fund manager is aiming to generate maximum returns.
Yes, sir.
Passively managed funds simply follows the market index. An index fund is something like a passively managed fund.
Yes, sir.
So there will not be too much of buying and selling.
Yes, sir.
So examples are index fund, exchange traded funds, etc.
Yes, sir.
Classification of funds by investment objectives. Okay, capital appreciation, which is growth. Okay, capital preservation, which is protecting the capital.
Yes, sir.
Right? Regular income, which means like monthly income, some investors will need. So they can invest in regular income schemes.
Yes, sir.
Liquidity, which means I should be able to buy and sell at any point in time. Right?
Yes,
That
sir.
gives liquidity. Tax saving. There are ELSS schemes which
Yes,
offer
sir.
tax savings. Right? Equity linked saving schemes
Yes, sir.
which give tax savings, but they are not liquid.
Yes, sir.
Okay, so there are multiple, funds. There are multiple types of funds which are based on the investment objective. So there are different funds which are basis risk and return. There are
Yes, sir.
different funds which are basis active or passively managed fund. There are different funds like open-ended, closed-ended funds. There are different funds like basis the investment objectives,
Yeah.
right? So that is how there are so many mutual funds which are available for customers, right? As a banker, you must have good knowledge of which funds are suitable for customers basis the tenure that he wants to invest in.
Yes, sir.
Okay. There
Yes,
should be
sir.
a proper advice from your side to the customer. It should be genuine advice, right? Not because
Yes, sir.
you today have target for a particular fund, you try and push that fund to a customer. Not like that. Okay. You
Yes,
must
sir.
always have the best interest of the customer in mind
Yes, sir.
when you are selling a product to a customer.
Yes, sir.
In banking, that is a very, very basic way in which you can build trust and relationship with the customer.
Yes,
You
sir.
should always have the best interest of the customer in mind. What is the best interest of the customer? You are giving him good advice, basis the tenure that he wants, and basis his risk profile,
Yes, sir.
right? Because return is proportional to risk and return is proportional to tenure. We have seen this multiple times. In mutual fund investment, these two are very important considerations for any investment.
Yes, sir.
Right? Okay, let's look at growth funds are schemes that are designed to provide capital appreciation, primarily invest in equities.
Yes, sir.
The investment time horizon is medium to long term investment. So, typically, for a growth fund, the customer should be able to stay invested for 3 years to 5 years. Okay, that is the kind of tenure the customer should have if he wants a growth fund.
Yes, sir.
Right? Even when you are recommending, you should recommend this kind of tenure to the customers when you are recommending growth funds.
Yes,
Okay.
sir.
Income funds is to provide steady and regular month income to the investors.
Yes, sir.
Income funds are more oriented towards bonds, debentures, and government securities because you have to give regular income to the customer. Okay.
Yes,
So
sir.
the fund manager will invest more in debt instruments. Okay.
Yes,
Fund
sir.
return from interest income earned on these investments as well as capital gains can change in the value of the securities. The fund will distribute the income provided the portfolio generates the required returns. Right?
Yes, sir.
Liquid funds. So as the name suggests, these are very short-term investments. They invest in liquid schemes, money market mutual funds, overnight funds. Okay.
Yes, sir.
These are instruments, these are money market instruments where maturities will not be exceeding 91 days. So the return will also be slightly lower here because
Yes, sir.
here it guarantees you liquidity. You can liquidate at any point in time. These are ideal for investors who wish to park their surplus funds for very short periods. Right?
Yes, sir. Yes, sir.
We have already seen money markets, right? Commercial papers, treasury bills, government securities, up to 1 year, certificate of deposits. So all these are money market instruments.
Yes, sir.
Classification of mutual funds. First level of categorization is on the asset class that the fund invests in, which is debt, equity, or money market or gold. Okay.
Yes, sir.
Second level is these investment strategy. Okay, like income fund, which should give income on a regular basis. Large cap fund, mid cap fund, small cap fund, value fund, infrastructure fund. So these are themes where the fund manager will invest in. There are certain large cap funds. What is a large cap fund? What is large cap?
Amount will be high.
No, no, no. Large cap, medium, mid cap, and small cap. Okay, you have to go online. You have to check it and tell me tomorrow.
Large gap, medium, mid.
Large cap, medium cap, small cap.
Yes, sir.
This has to do with the stock market, the size
Yes, sir.
of the equity. Okay, the size of the stock.
Yes, sir.
You will have to find out and tell me. Okay.
Yes, sir.
Mutual funds are classified as equity schemes, debt schemes, hybrid schemes. Equity is simple, they invest in stocks. Debt funds, again, they invest in debt instruments. Okay. But you must
Yes, sir.
always understand that equity schemes will also have about 20% of debt.
Yes, sir.
Okay, to ensure liquidity, they will have at least 20% of their total corpus. They will invest in debt schemes. Similarly, debt schemes will have about 20-30% in equities. It doesn't mean that 100% they will invest in only debt funds,
Yes, sir.
debt instruments.
Yes, sir.
Okay, so generally there is a mix, but look at hybrid schemes, the mix is higher.
Yes, sir.
Hybrid schemes are, 60% equity and 40% debt, or 50% debt and 50% equity. So something like that. It's a mix. Okay. Solution oriented
Yes,
schemes
sir.
for retirement, children's fund, children's education fund, pension plans are there in mutual funds. Okay.
Yes, sir.
Other schemes, exchange traded funds, index funds, all are there. Okay.
Yes, sir.
Now let's look at, in the names itself you can find out. Okay. Typically when the mutual fund advertises, you will come to know what sort of fund it is. Okay.
Yes, sir.
Multi-cap fund, at least 75% of investment in equity and equity instruments. So 25% can be in debt in a multi-cap fund. Okay. Flexi cap fund, 65% in equity. Large cap fund, 80% in large capital stocks. Large and mid cap fund, 35% in large cap stocks and 35% in mid cap stocks.
Yes, sir.
Mid cap fund, 65% in mid cap stocks. Small cap fund, 65% in small cap stocks. So you must
Yes, sir.
understand what is a large cap stock, what is a mid cap stock, and what is a small cap stock. Very important, considering
Yes, sir.
this is the way mutual funds are invested in. Okay. What is a dividend yield fund? Predominantly invest in dividend yielding stocks with at least 65% in stocks. So there are certain companies which regularly pay dividend. Okay. Like Hindustan Lever or Colgate Palmolive. They will all declare regular dividends.
Yes,
Okay.
sir.
So if the theme of the fund is dividend yield, then they will invest more in dividend yielding funds, dividend yielding stocks.
Yes, sir.
Value fund, value investment strategy, 65% in stocks. Contra fund follows a contrarian investment strategy. So, if a particular stock or a particular industry is going through a down cycle, there are industries which operate on cycles. Okay, in some cycles, the industry will do well. In certain cycles, the industry will not do well. So, contrarian investments, contra fund, what they will do is when the stock is not doing well, they will purchase it because the price will be lower. And as the cycle turns, the price of the stock will increase, and so it will result in higher profit.
Yes, sir.
Okay?
Yes, sir.
Focused funds focused on a certain number of stocks, maximum 30 in equity and equity related instruments. Sectoral thematic fund, as we said, pharma sector or infrastructure sector, defense sector. There are so many sectors they will invest, they will focus on that particular sector.
Yes, sir.
ELSS is the tax saving fund with a 5-year lock in.
Yes, sir.
Sector specific funds, we have seen it: banking and finance sector, pharma sector, technology. Thematic funds for a particular theme, that is infrastructure, service industries, PSUs, or MNCs. So, depending on that particular theme, they will invest, right? Value funds, equity
Yes,
funds
sir.
may be categorized on the valuation parameters of the stock, such as growth funds identify momentum stocks that are expected to perform better than the market, right?
Yes, sir.
Value
Yes, sir.
funds identify stocks that are currently undervalued but are expected to perform well over a period of time as the value is unlocked. So there are certain stocks which may not be doing well at this particular point in time, but they may grow well. So value investing, looking for undervalued stocks and they will invest on such stocks. Contra fund we discussed, ELSs we discussed. Okay. Now going on to debt schemes, overnight fund has a maturity of 1 day, liquid fund maturity of 91 days. So these are all debt schemes, okay, where they will invest in treasury bills, government securities, debentures, certificates of deposits, and all the and other type of fixed return instruments. Okay. Ultra short duration fund is for 6 months. Low duration fund is between 6 and 12 months. Money market fund has maturity of up to 1 year. As you know, money market is for investments less than 1 year. So 91, 182, 364 kind of tenure. Okay. Short duration fund is 1 to 3 years. Medium duration fund, debt and money market instruments with duration between 3 and 4 years. Long duration fund, 4 to 7 years. Long duration fund is above 7 years, sorry. Corporate bond fund, 80% to be in corporate bonds of AA plus rated corporate bonds. Okay, so like this, there are multiple debt schemes which are also available where the investment is on a particular guideline. Okay. Hybrid funds, conservative hybrid fund, 10 to 25% equity, 75 to 90% in debt. So are you getting this? Hybrid fund is a mix of equity and debt. Okay.
Yes, sir. Yes, sir.
Balanced hybrid is 40 to 60% in equity and 40 to 60% in debt, depending.
Yes, sir.
This we have already discussed. Okay. Equity
Yes,
savings, equity and equity related instruments, 65% debt instruments, 10% derivatives, depending on the scheme information document.
Yes,
Okay. What are the advantages of investing in mutual funds? This is very important because this is how you will communicate to your customer and this is how you will convince a customer. Okay, professional management. We have discussed this because the fund managers do research and then they invest in certain stocks. Okay, which as a retail investor, a customer may not be able to do it. So the kind of research reports they get and the kind of decisioning that they do is much more professional. So the returns will be much more professional. Fund manager also continuously monitors investments and rebalances the portfolio. So wherever they need to sell, they will sell. Whichever stocks they need to buy, they will keep on monitoring and buying or selling. So that way, the returns over a mutual fund will be definitely good. Risk diversification. It is an easy way for you to diversify your risk because there are multiple securities, which are multiple stocks that we will invest in, right? And there are multiple asset categories such as equity, debt, and gold. Thereby, you will not put all your eggs in one basket. All the investments will not fail at a single point in time. That way, the investor will get much better returns because his investment is done in multiple stocks and also different kinds of instruments. Risk diversification is a big advantage for mutual funds.
Yes, sir.
Invest in small amounts. As we have discussed, there are many investors who pool their funds and which is invested in the stock market by the fund manager, right? So we can start, mutual funds investment as a bulk investment or even as a SIP, systematic investment plan.
Yes.
Right? Even small amounts of 500,000, 2,000 can be invested every month.
Yes,
so that way, small amounts itself will give us much better returns. Liquidity, mutual funds can be bought and sold at any point in time. Okay? The settlement will happen in 2 days. Low cost, even though there is a cost for the fund manager and fund management, the cost is extremely low. Okay? And it is well regulated by SEBI.
Yes.
Tax benefits, ELSS schemes up to 1.5 lakhs qualifies for tax benefit under Section 80C of the Income Tax Act.
Yes, sir.
Okay, so these are the big advantages of investing in mutual funds. And you,
Yes,
as a
sir.
banker, you should be able to advise your customers on mutual fund investments. Okay,
Yes,
you will
sir.
be given targets on mutual fund investments, which you will have to promote more and more for your customers. Now, there are certain people who will wonder, sir, we have targets on FDs, we have target on savings account, and how can we have targets on mutual funds? Because when a customer invests in a mutual fund, he will give a check from the account only. Okay, which means your account balance will go down,
Yes, sir.
right? But you have a target for account balance also.
Yes, sir.
But you must understand that this is where a balance has to be maintained. Okay.
Yes,
Like
yes, sir.
not all customers will be interested in mutual funds.
Yes,
Okay.
sir. Yes,
Select
sir.
customers will invest in mutual funds, and that is why we say surplus funds.
Yes, sir.
Some customers may have enough surplus funds for a longer tenure investment. Okay. As we saw, the peak rates on FDs are about 6.6 or 7.1%, whereas mutual funds can offer returns between 10%, 12% and all.
Yes, sir.
Okay, so for such customers who are expecting better returns, there you will have to act as an advisor and you will have to advise for mutual funds. Please note that. Mutual funds are to be advised for customers who have a
Yes, sir.
longer investment term.
Yes, sir.
Okay, it is a good investment. Okay,
Yes, sir.
and has given excellent returns to customers over a longer period of time.
Yes, sir.
Right?
Yes, sir.
Okay. So any other doubts you have?
No, sir.
Okay, okay, fine. So we'll continue tomorrow. Okay, tomorrow
Yes, sir.
we'll go
Okay.
on to insurance. Okay,
Yes, sir. Yes, sir. Thank you, sir.
okay, thank you.
Yes, sir.